don't know me, I am a GP in Flory Ventures. We are a VC investing in Web3 and impact intersection. Before I start the meeting, I want to thank both Eric from Node Finance, who was helping me in the last months pushing stuff forward, and Reuven Palatnik from Reuven Palatnik Angel Investment for helping push stuff forward. So thank you, guys. I will start with a little deck, trying to explain where am I aiming for, what will be the agenda for the meeting, and hopefully that will remain the structure for the next meetings as well, in order for us to maintain a structure. And obviously we can change it and find other people's offers. So I'll start from the beginning. As always, this is the Credit Collective meeting number 2. Basically, our agenda as a collective is to be a group of builders and investors looking to solve the $5 trillion credit gap. And I believe that what brings communities together is not only the shared goal, but doing shared projects that will allow us to push the industry forward. And the idea here is, as a collective, to see if we can put shared efforts into those projects that will allow all of the companies and investors, NLPs, and whoever you are in this industry to help us move forward all together. The way I think this meeting will take place, for next meetings, I'm happy to change it. If you have ideas, let me know. So meetings will be happening monthly. The first 5 minutes will take for general updates, welcome first comers, like short introductions for people it's their first time, and short intro, I'm talking about like a really small sentence because we're a lot of people. Yes, in the next 25 minutes, we'll take into one company and one VC in the space presenting it themselves. Today we have Soildworld and Unicef crypto fund presenting themselves. If you'd like to present yourself in the next, like in depth for like 10 minutes in the next meetings, let me know, write me, and we'll just do a schedule of everybody who would like to present themselves. The idea is to give a stage to everybody here. Then in the last 30 minutes of the meeting, we will go into the different projects that we do. The idea is to have each project operate as its own group of people. So the Credit Collective is basically the higher level organization that at the moment is, everybody who participated in writing stuff and helping pushing stuff forward. In the future, it will be more organized, and we'll have like who is a member, what is the meaning of being a member, etc. At the moment, we're doing it on a voluntary basis, and just to make sure this thing happens. 3 initiatives that will start. The Credit Collective DAO that we already started working on, where we will create a DAO that will be lending money to some of the project or staking money to some of the projects here. We already started working on that, and we'll give an update later. Thought Leaders group, Telegram group. This is the group where everybody are in, and a database that will give more transparency into the project, into all the project and VCs that are happening in the space. That we will talk all about in the second stage of the meeting. And there is another initiative that I didn't write here from the Celo Foundation that started their own initiative that Alex will talk about today and will be presenting. That said, if you have your own initiative that you would like to push forward into these meetings, and in order to invite people to participate with you, those meetings will be the time. And there's plenty of ideas that we can do. With that in mind, we will start with our first person to, people who are new here for that. Maybe quick 1 sentence, who you are, how are you involved in the credit space, and what you do. So just like people who are new here, just start.
Oh, I can do the first one. I'm Nicholas. I had a call with Tomer a couple of weeks ago. I work with HV Capital, which is a Web2 fund out of Berlin, and we started pivoting into crypto in the Web3 space, or open up a small vehicle, not pivoting completely. And are very much interested in refi and the DeFi space, and operate under the slogan "Doing good with blockchain." So that's how I came here.
Thank you, Nicholas.
Maybe I can follow up. So, hi, Alexis from Atlantis Labs. So we're building a credit protocol that aims at opening the private debt market on chain and allow fintech companies, whether from the revenue-based financing sector or emerging markets, to finance themselves using cryptocurrencies.
Maybe I can just follow up since I'm with Alexis. So Hugo here, also working at Atlantis as a head of sales and partnerships. So yeah, we're trying to bridge TradFi with DeFi, bringing real world assets and real world businesses on chain.
Yeah, Yoam is here. So I'm also working on onboarding Web2 companies to blockchains and how they can use the finance, micropayments. Goodworld is one example. As well as very active on the microfinance industry. I'm based in Geneva, very active industry here. And now the microfinance industry can move into blockchain. Very active on the Cardano ecosystem, but collaborating also with definitely other ecosystems. Part of something called Cardano for Climate, if you heard about that.
I can go next. My name is Clanthea. I'm co-founder of Masa. Masa is pioneering Soildworld token. We're the first EVM compatible Soildworld token project that launched last year in August. When it comes to the use case in credit, we offer a few types of SBTs that will be useful in the credit use case. We have Web3 credit score use case, which is in partnership with Julian at Credit Protocol. We have emerging market credit score SBT. And then 24 hours ago, we just launched our 2FA SBT, which effectively kill bots. And in the past 23 hours, we have reached close to 2,000 mints already. So if you're interested, let me know.
Hello, I'm Gabriela Chang, co-founder of EpiHub. We've been operative since 2018. We are a refi protocol in the intersection again of impact and Web3. What we do is enable affordable finance for smallholder farmers that don't have data to be evaluated upon risk evaluation on data and don't have collateral. So we develop a crowd collateral to protect crowd lending into long-term smallholder farmers in emerging economies.
If no one else wants to present himself, we'll just move to Stenver now. Start the more of a deep dive. Stenver, the stage is yours. Enjoy.
Perfect. Thank you. So hello, everybody. I'll first give a quick overview of my background, and then I'll give you an overview of the Soildworld and what the investment opportunity in Soildworld is and how it works. So my background is I'm originally from Estonia, currently living in New York. I've been in growth tech for a decade, gone through multiple venture-backed businesses, founded multiple venture-backed businesses. For example, I was early employee in Clea, which is now a New York-based unicorn. It's an enterprise SaaS business selling to Fortune 500 companies. I took it all the way from seed to almost Series B. I was also vice president in Estonian Founders Society, which is basically the group in Estonia that gathers all the unicorns in Estonia. I was in the board with the Taavet plus 10 over there, which is $1 billion fund in Estonia. And also I've been founded e-agronom, which is essentially in Central Eastern Europe, turned farmers into regenerative farmers, creating carbon credits. It's 2.4 million acres under management. And I took it all the way from founding to around Series B. And yeah, in e-agronom, we noticed an issue about the offtake agreements, like pre-financing, getting carbon projects off the ground. It's incredibly difficult. And I quickly found out this issue wasn't only in e-agronom, it was actually for all the carbon projects out there. Like getting actually the project started is one of the most difficult issues when creating new supply. And the reason for that is we believe that there's no advanced financial structures in the market. It's very untransparent, fully OTC, and like pen and paper based. It's like 15th century bartering economy. So this essentially meant that we started solving that for e-agronom, but then we understood this is a problem for everybody. And then now I'm working on Soildworld full-time. I'm like super excited about doing this because it's finances, it's blockchain, it's about saving the, stopping the climate change. And there's a lot of upside potential here for financiers of carbon projects. So just in case, to make sure we're all on the same page, I'll give a quick overview of like what even are carbon credits, voluntary carbon market. And more importantly, what are offtake agreements, also known as forward agreements. So voluntary carbon market is, you've all probably heard these companies say that we're going to reach net zero. It's mostly pushed by a growing climate crisis and investor pressure. Harvard Management Company or BlackRock, they're all, for example, saying that they are decarbonizing their portfolios. And all the portfolios need to reach net zero. Otherwise, companies lose access to funding. So all these companies are pressured into becoming net zero. And the first step for them is to reduce their emissions. But the second step is to, it's impossible to reach net zero completely for most companies in the world. So the last mile reduction is done through carbon offsetting. Now, all the McKinsey, IFF, UN, they all say the market is going to grow 50x by the end of the decade. But we have a growing supply problem. Honestly, with our current markets, the way they're set up, it will be incredibly hard, if not impossible, to reach our supply goals because the financing is just too difficult to do. It's all based on something called offtake agreements, which is a necessary mechanism to get these projects off the ground. How it essentially works is that projects on the ground, they get advanced capital upfront and they deliver the credits later. The capital is given to them at a discount. And then these credits become spot credits and the carbon projects can sell off this, or the financiers can sell off these credits at a spread. But like I said, it's all pen and paper based. It's all fully OTC. There's no transparency over there. So the capital moves very slowly. And the projects have difficult time getting started. So we're solving that in Soildworld. We're creating like advanced financial structures to make this market start working. So that was like the big picture overview of the market. Because let's just walk through some of the options the investors have right now if they want to invest in the carbon offtake agreements or carbon forwards or carbon markets in general. Like if you one option is go to like brokers or traders, but they have lots of fees and there's very limited upside and you don't have any transparency if you get a fair deal. You can also like invest in futures indexes like NGO or GEO, but these are untransparent and they have their own problems. So if you want to get the most upside, you got to do the offtake agreements. You got to do direct investments. But this is where the best returns are. But that means you got to specialize on the market because otherwise you won't make it in this market. So we're solving that gap. We want everybody to have access to offtake agreements without them having to become like world-class experts in carbon markets. We believe this can be done by creating advanced financial structures, just the way, options and futures were created in 1800s and the farming industry started blooming. We can do the same in carbon market by bringing advanced financial structures in the market. So at highest level, we want investors and you to put capital into the offtake agreements. That's where the money is. That's also where the most impact is, because arguably you're helping new projects off the ground and you get the upside appreciation since offtake agreements trade at the discount versus spot. So you can capture that. It gives exceptional returns. Our platform gives around 10 to 17% APR. We focus on higher tier carbon credits, the ones that are expected to be in supply squeeze in the future and already are. They have historical appreciation of around 30% year on year for the last 5 years. So you can have exposure to that appreciation, plus you get the APR. It's also fully liquid market, which means that the investor can exit anytime. They can always get a fair price because it's a public price. It's all incredibly diversified, all the underlying projects. You can think of it as an index for carbon credits, for offtake agreements specifically, not spot. We don't do spot at all. And yeah, it has guaranteed delivery thanks to our institutional supply partners. So if there's a non-delivery, then the suppliers provide the replacement credits. Great team, over 20 years of experience. Some of our people are from B0, which is one of the world's leading carbon credit rating agencies. Every project and all our documentation and everything is on the blockchain. So it's super transparent. It has thorough due diligence and follows like true free market mechanics to make these things work. And yeah, we're just doing it with more transparency and more liquidity than anybody else. And yeah, so limited risk, high, huge problem in the market. I believe the biggest problem there is exceptional returns for the investors, and that's how it is on a high level. I'm happy to dig deeper and answer any questions, and I just kind of wanted to introduce all of this stuff.
First of all, thank you, Stenver, for being first at this thing. It's always hardest to be first. Just, I want to be conscious of time, and I want to give, I don't know your name, but it's Sebdi on your, the one from the Crypto Unicef Fund, enough time
Sanna.
to present, Sanna, sorry, to present herself. So if everybody have like question for Stenver, the point is for him to make the presentation. Everybody, your Telegram is open, right? For DMs?
Yep.
So I invite you to connect over DMs. And Sanna, I think we'll just move to you to tell us about your activity and what you do.
Super, thank you all so much. And it was great to hear from you as well. And fantastic to be connected with everybody. I think every time we engage with the ecosystem, it's always fascinating. I work for the Unicef Venture Fund. UNICEF, as you know, is an organization, of course, working for children in over 190 countries. I work with an office called the Office of Innovation, which is based in Stockholm. And within the Office of Innovation, we have something called the UNICEF Ventures team. Just giving you a little bit of context so you know where we're sitting. The Ventures team really looks at working with frontier technologies such as blockchain, drones, data science, virtual and extended realities. We're trying to see how solutions in the space can be used to do things better, to understand and address challenges that children are facing today better, but also finding new ways to address new challenges that are being created as we pass through various stages of digital development, as we call it. So within the ventures team, we also have something called the venture fund. The venture fund provides up to $100,000 of investment. So we invest in startup solutions across the world. We only invest in UNICEF program countries, and you can understand that essentially as developing nations. So we invest $100,000 in for-profit startups. These are equity-free investments. The only requirement we have from our end is that we require these solutions be open source licensed. So open source licensed, when they apply to us, you should have an MVP, and you should be registered in a developing country. Those are really the only criteria we have. The angle that I am here to share with you is this funding is available in both fiat as well as crypto, and that's because in 2019, October, we launched, which is the very first of its kind, crypto fund within the United Nations ecosystem. So it's the only crypto fund in the UN system. We launched this with the goal of course, leveraging the trust, the transparency, and the efficiency of crypto, and of course of being able to use this in efficiently helping the organization grow in the future and explore what it means to operate in a digitally financed future. As you would imagine, UNICEF is a fairly big organization, which meant, really helping the organization to build up its systems, its structures that is used to very traditional finance on how does it then work with cryptocurrency. And so we are able to accept funding, hold and disperse funding in Ether and Bitcoin at the moment. Going forward, we will also look at potentially accepting stable coins and making investments in stable. And so that's currently who we are and what we're doing. I'm happy to answer any questions you may have. To date, we've made about 42 investments in crypto. So that's a little bit of us, and I'm also available on the channel on Telegram, so feel free to reach out if you have any questions. Thank you.
I will open it up for because you were quick, so I'll give another 2 minutes of questions here. If anyone want to ask something about the program.
I would like to ask Bedi, open source, it means the whole project has to be open source, or that we use public blockchains and the smart contracts are public and that?
Yeah, you're absolutely right in the understanding. It does not need to be the whole solution. We, of course, want these companies to be profitable. The goal is not to make it completely open. It just needs to be certain parts of, or certain components of the solution that should be provided open source. And then you can, of course, have, SaaS models or different variations of models that can be built on top of that. One thing that I didn't mention is that, so we provide the $100,000 in funding, but we also provide a 1-year acceleration support program. So we have 7 different streams of mentorship that include, business model mentorship, open source mentorship, mentorship also for diversity, equity, measurement and metrics, as well as thematic experts. So we have in-house blockchain experts or drones experts who also provide thematic expertise on the solutions over a 1-year period. And after graduation, these companies, of course, have the chance to work with a lot of UNICEF partners to scale their solution or also scale across UNICEF program countries.
I've got another question.
I will write later.
You mentioned that you need to be registered in specific countries.
What is your question, Adal? No, it wasn't.
You mentioned that you have to be registered in specific countries. So I'm wondering which countries and what exactly you have to have an operating company there. What exactly are the conditions?
Yeah, I'm just sending you a link of the list of program countries. So that's essentially the list of companies where we work. And you can be registered as a for-profit entity, so as a private LLC equivalent in any of those countries. I'll just send over the list in a moment. If I don't send it here, I'll drop it into the chat.
Awesome. That was very insightful, and thank you for that, Sanna. And I hope that some project will reach out thanks to this call and this group in the future. So same for other VCs who are interested in the next meetings to be presenting. Come over, let me know, I'll put you on the list. And with that in mind, Sanna, I assume your DMO opens for people who want to reach out to you. Okay, well, make sure to put it next to the video if people in the future want to reach out to you to access your details. Awesome. So next, I want to go into the initiatives and talk about what are the initiatives that have started. And we will let, if other people want to start other initiatives, welcome them to start other initiatives. But I'll start with what we already have in hand, talk about that a little bit, and we'll move forward on there. So I'll start with the simplest one that we started, which is the group and those calls. The groups are, the idea of the group is to allow anyone involved in the impact credit space on chain to join the group. Please add people that you know that are from the space, that are either founder of companies who already raised money, VCs who already invested in companies in the credit impact space, or LPs that provided capital for this space. Also welcome the researchers who are interested in the field, etc. And that's our group. You're welcome to invite anyone who is from that space and you think will be relevant for the group in that sense. And that's the group. From there, second initiative that was offered by the Celo to the group, I would like to invite Alex to talk about as their initiative. I tried to help them to help Alex design it. So Alex, you with us?
Yes, I'm here. And Tomer, thank you for sharing the stage. We're very excited to present kind of an opportunity as kind of the Celo ecosystem's contribution to the Credit Collective. By way of introduction, started with Celo over 3.5 years ago, before we kind of had a test net as CFO, and now I am leading liquidity and investments for the Celo ecosystem, and that includes a huge focus on anything related to natural capital-backed assets, as well as anything related to impact-oriented projects. So with that said, we are looking to do 500K to 5 companies, so 100K each, and for the purpose of staking, sort of a zero interest lending, you could think of it. And the staking period is 3 to 6 months. And these are products or tools that have exposure to the Celo blockchain. And the rewards from those stakings will go back to the staking pool and in order to support even more companies. So at first it'll be CUSD, but we're also looking at other stablecoin options, including USDC through Wormhole Bridge. So yes, I'm gonna put up a small Google form that I will send to the Telegram group. And so if there's any interest for this kind of zero interest loan for staking, please do let us know by filling in that form. You can also DM me on Telegram or add me. Again, these are projects that are impact oriented, have exposure to the Celo blockchain. We anticipate that most of these pools will be on UniV3. Tomer, what did I miss? Tomer was very kind in helping me think through some of these details. So appreciate the help from the Credit Collective on getting this off the ground. Tomer, what did I miss?
It's not what you miss as much as I want to add something to it. So I think a good initiative that I would like to look into as a collective would be that I think it would be nice if the collective could sponsor altogether a researcher to follow the money that you guys would stake in order to write papers on what happened with the money, on the impact of it, on the supply chain of the money. And like adding to your proposal, I would add like a research that would be an add-on initiative to your initiative. It's not missed as much as like an idea that I would like to add. And if someone would like to has an idea of good researchers, maybe we will open, like I will open it to discussion on the Telegram group to find the right researcher and how we sponsor that.
Can you explain again the mechanics of the pool and the purpose?
Yeah, so one, maybe start with the purpose and then go into the really to these are in some ways like pilots, and which is one of the reasons, you know, Tomer's suggestion is really helpful, is to measure, you know, what is the impact? Are we seeing the positive kind of liquidity bootstrapping that we want? But we basically want to see liquidity for a lot of these initial projects. You know, as one example, you know, we have like a project called Plastics that we're currently working with, and they, you know, don't have any liquidity for their tokens. They have an amazing project in kind of the Kyoto Protocol for plastics and helping with offsets, but they need kind of initial liquidity and help with getting liquidity for these tokens. And so a zero interest loan helps them bootstrap those initial liquidity so people can start trading. And once they can start trading, they're generating fees, and that incentivizes other liquidity providers. But for a lot of these projects, it's not, either they don't have direct source to this kind of liquidity. Many of them have access to equity investment, but not liquidity. So it's important to distinguish between those two sources of capital, or they don't have the expertise. And you know, we have both of those things to kind of fill in the blanks for some of these promising projects. But basically, we are trying to bootstrap liquidity in the form of a zero interest loan to accelerate progress with these impact-oriented tokenized projects. And the mechanics of this, kind of oversimplify it to start. Basically, the company gets a 100K loan for a 3 to 6 month period with the possibility of renewing it. That liquidity goes into a UniV3 pool, most likely with a secondary pair of CUSD or USDC. The project in many cases will provide their native token and will be matched by CUSD and or Celo. And so that's kind of the purpose, an example of how of a project that would be relevant for an initiative like this that we've kind of gotten started on, and the mechanics of the pool. Yeah, Tomer, is anything to add?
Yes. So I think, like, just to make sure, I think the LP is like the LP for liquidity pools is one example. Another example in that sense could be like lending to futures of carbon of like 3 months, 6 months project, or lending to stakers to farmers, as Gabriela explained, or staking to whatever it is that needs liquidity. Is from my conversations with credit companies, liquidity after launching the product, liquidity in various forms. It could be LP for the LP for the AMM. It could be LP, like LP money for the credit. It could be LP money for the loans. Like, is a problem, and so that's.
Yeah. So that's exactly the additional point. There is, we want this to be kind of a blueprint for other liquidity providers. So what we seem to be noticing is that there's a bit of a chicken and egg problem in which, liquidity providers haven't seen proof of it, and they're too afraid to kind of get started. So we're hoping that through this initiative, we can demonstrate a blueprint to other liquidity providers that, hey, this is a viable solution, and here are the numbers to prove it after this loan period. So yeah, as Tomer mentioned, like liquidity is that first initial bootstrapping step is very challenging for a lot of these projects, and we're trying to solve that problem through this initiative.
Are we talking about
I have
the XDAO that you started, Tomer?
No, two different initiatives.
So whose initiative is that? Who funds that?
That's
So this
Celo.
is, yeah, so this
Celo.
is
Okay.
an affiliate entity of the Celo Foundation, who is funding this, called APF Foundation Company. Yep.
Thank
Okay,
you.
Just a remark. I think that probably liquidity providing, I think it's probably the most problematic, because the other projects usually their token would probably, once you supply liquidity, there would be lots of exits, and then they would probably get into debt in terms of the value of the liquidity they are holding. And it seems to me more reasonable to provide the zero interest loan to productive things like, providing credits for loans or for carbon credits and so on.
Mm-hmm.
Yep.
Definitely. So yeah, it's a liquidity, as Tomer said, and carbon credits are definitely top of mind as a way to kind of bootstrap financing and or liquidity.
Yeah, I just wanted to say it's an excellent initiative. I think getting bootstrapping liquidity for real world assets is one of the hardest challenges in the entire space for all the projects. And just on Hadar's comment, I think as I understood, the main thing is to actually make sure that the liquidity provisioning goes to productive assets, for example, in carbon forwards. So like, or like these plastics and etc. So these are all productive assets. But I did have a question as well, Alex. How do you see it in a mechanical way? Like, as I understand, this capital is given to bootstrap these pools of these projects. Is it given in a custodial way, or is it given like in a non-custodial way? And like, how is it set up, like from a legal perspective, essentially? Unless that's too detailed right now.
No, it's a great point. So one of the initial models we're pursuing, and again, there's going to be different models depending on the project, but one initial way we're looking at it is basically in Uniswap v3, the project contributing liquidity and APF simultaneously contributing the liquidity. In that instance, it would be kind of a non-custodial approach. In other instances, we're looking at a more centralized approach in which there is a loan agreement between APF and another entity. We work directly with market makers. Many of them are the largest market makers in the crypto space, like Jump and GSR, and they're coordinating with us on some of these opportunities. So APF will basically in some cases take a custody role, facilitate that liquidity, particularly in instances where the project maybe doesn't have all the expertise they needed, or don't have the relationships with market makers that can help facilitate that liquidity. But yeah, that's the most. I mean, this is a new initiative. So I'm also open to your suggestions, Stenver, on what that can and should look like. We've looked at the kind of non-custodial model through Uniswap. We've also looked at kind of a centralized lending either we give like a loan to the project, or a project gives a loan to us, depending on their needs and sophistication around provide around liquidity. So, but like I said, this is a brand new initiative, and so I wouldn't pretend to have all of the answers, and I'm open to suggestions from this group.
Yeah, I think the main point here is there's 500K, like this understanding of liquidity being a problem for early stage startups in the credit space. And there is liquidity that wants to be deployed for short of 3 to 6 period of time to make sure it supports the projects improving their points. This is like the main understanding that most of the founders here need to get from here. Yes, I know each has his own mechanisms of if it's like tokens, if it's LPs, if it's NFTs, if it's whatever, right? Like, correct me if I'm wrong, Alex.
Yeah, no, that's right. So I'm gonna put up this Google form, and I would love this, to hear the proposals, and then we can see how we can, come up with the right form to meet those needs. I don't see this as being, a one size fits all approach. But yeah, Tomer's absolutely right. At a high level, there's a huge liquidity need for early stage projects. We're trying to bridge that liquidity bootstrapping gap and also provide a blueprint for other liquidity providers to feel comfortable helping expand this marketplace. But we're open to different proposals. So if you say, hey, this I think this is a good idea, but our model doesn't fit into the form of cooperation that you're proposing, we're open to that, and please just describe your needs in the Google form.
Awesome. Wait, who is talking again? Reuven. With that in mind, Alex, I would say thank you, and I will open please send the form. We'll send it over in the chat and in the summary of the meeting. I think we have the high level, and I want to take the next 15 minutes to talk about the next initiatives that we want to move into. So next initiative that we started is the Credit DAO, working to solve the same problem that we just talked about, as we saw it as an initial problem with everybody we talked about. The idea of the Credit DAO is to create a DAO formed by the members here, to be able to lend money to the startups. The idea is, we made a little doc, and obviously there's a little bit of comments here that some people made, and it's still a work in progress. I will explain the point of the DAO, the stage the DAO is in, and the future stage that we want to get into. So basically, Credit Collective DAO is a credit collective initiative aiming to unlock existing investments opportunities to its members. We will offer funding specifically designed for impact-driven lending blockchain companies by providing them funding for their lending operations, whether through direct lending or staking. We empower these companies to start building their book to prove their models so they can later raise larger amounts of money and achieve their full potential and drive positive change. Join us in our mission to revolutionize financial world. The call to action here that I'm inviting you is, if you receive this doc, see it as an invite to join the Credit Collective DAO. Joining would mean staking $1,000 to the DAO, and you'll get 1 governance token. Don't click on the link that is here, because we're not sure that we will use the system that we're using now. We will do a separate group to anyone who is interested in being part of this DAO, okay? LP is a liquidity providing token. GT is a governance token that will be non-transferable. The treasury will get, obviously, all stable coins, CUSD, USDC, USDT, any stable coin that is part of the, is acceptable. LP tokens can be sold in the future if you want. The idea of the round 1 is just an experimental round. That in this experimental round, we want to make sure we have a good working flow and that we are shaped good enough to allow us to raise into the DAO bigger amounts of money. So before we go into institutional money or ask people to stake into the DAO a more meaningful amounts of money, it's good if we'll have already like a deal flow for some of the companies here that we will be staking into. We have our decision making in place. We have how to put money in, put money out. Very good. Initially, we'll start with a quorum of 20%. GT members can vote on anything that can be changed. The GT tokens are non-transferables. What's important here is that you're granted with a GT token in return for your participation. If not interested in participating, you're welcome to join the next round as an LP. GT holders will be evaluated every 3 months, and members who show zero participation will just lose their GT tokens, and people will be participate. Everything here will be able to change, like we can change everything. This is just the initial invitation. The underwriting process that you know what, I think that's like a bit of enough for now. So for this initiative, what I want to say about this initiative is that people who want to stand to the standards that I just talked about, staking as a personal $1,000, getting a governance token and participating in pushing this thing forward, I will have us on a separate group where we will discuss all the terms of the DAO in that sense. And then we'll have the existing group that is for everybody who wants to discuss credit, and another group just for the Credit Collective DAO in that sense. So I think, first of all, does anybody have any question about the Credit Collective DAO on the high level, on its goals, etc., before I move forward?
Are you guys gonna start raising into the Credit Collective extra capital as well?
Only after the experimental round that we see that everybody feel comfortable with, and that we see that, you know, it's because we already been talking to people. Some people show their interest in putting money into it. Only after we see that we do it in a legal way, we have a good decision making, we have a good members in the DAO that are actually knowing what they're doing, and our underwriting processes, let's say, like it can prove itself, then we'll be looking into putting, like, raising extra capital. Only in the group that we have in the channel, few people talk to me that are interested in like putting their money into such a DAO.
And if I could say something about it?
Yep.
Is it quiet here? It's quiet here. No, just saying, to emphasize what Tomer said, this is still initial, so we are looking for members like to help. We wrote down very generally, you know, the ground rules, but we need to form the work processes for this DAO. So we are looking for contribution from more members. And once we have all the rules written down properly and we'll have an experiment, then we'll start raising money more seriously.
And I think that like decision-making process will be built out of like VCs, LPs, and founders could be powerful enough to draw enough liquidity to be supporting the type of impact we need for the companies at the early stages.
Yeah.
So that's about the DAO. In the last few minutes, I would ask, I know that Eric would like to start the database. So maybe, Eric, do you want to talk about that a little bit? Maybe we can have a discussion about what's important for people to be in the database. And if someone else would like to start a new initiative, he can just mention it now and ask for help from the group.
Yeah, I think we could briefly chat about it. I know we also wanted to sync on it a bit one-on-one before getting involved, but I think it'd be good to crowdsource some ideas here. So the general idea is to create a public database of all the projects that are open to fund. And I think it doesn't hurt to include historical projects as well that are not currently raising funds. But the idea is to aggregate all off-chain and on-chain data into a single database. I at least plan on collecting this just through a Google form. If there's other methods that people think would be better, please let me know. But yeah, at this stage, just trying to identify what are the data points that we want to track. So if you're a project and you're interested in being in a database, I think it'd be helpful for you to share what you think are, the numbers that you find investors asking about the most. And then if you're an investor or a lender, it'd be helpful to know, what are the data points that you feel are missing from some of the decks from these projects. I think that's kind of.
I think the database would be nice if you have also like potential LPs to reach out to and VCs. Like I would like to have like Floyd's name on the database as well. So like people can reach out to us as a so be a two-sided in a way.
Yeah, I think that's a good idea as well. So for funds as well, and I guess so for projects it goes the same way. What are whenever you're looking to raise capital from different funds, is there any specific information about the fund that you're interested in? I would imagine it's going to be more heavily leaning towards lending projects, providing more data about themselves. But yeah, we'll be able to play both sides of the coin there. Tomer, I don't know if there's anything else, any other questions you wanted to pose to the group regarding the database.
No, just like to see people's needs, everybody raising their needs, and then we'll facilitate it into something. We have a website that Floyd built for that, and I hope that we'll connect the database somehow to the website. So the Credit Collective website that is not Floyd's, we just built it, could just appear over there, so everybody could always access the data, the database. If anybody have a need that you want to show and want to talk about from the database, that will be a good time to say it. I think.
Yeah, or also feel free to send it in the group chat later if something comes to mind. But yeah, would love to hear anyone's ideas right now if you have any.
Yeah, I think if in the database the companies come on board can also mention the different needs, not only the funding needs, right, but also other needs that they might have. Right, team, strategic, technology, it will be easier to help them. If that makes sense.
Yeah, I was thinking that maybe we as funders, we can suggest, our investors that are not here in the collective, but that might be helpful for other companies. I don't know how we can do that, but it's creating a network effect.
You mean to suggest your other investors to join the collective as well?
Yeah, or to be in the database, like if you have investors that have invested on you and, might be interested in other companies in the collective, just building that connection.
Of course. It's still a pretty small niche, I guess. So, every bit of networking effort is appreciated. Yeah, of course.
Awesome. And with that, I think it's the invite as like Eric will do something initial and we'll find out a way to connect it to the website. And I think those few ideas are already like good for like a beginning something. And from there, we'll just iterate on that as we go by in order to make sure we read something that is actually serving the community. In the next few minutes, anybody else wants to invite the group to like a different like angle that is related, and if not, I'll just share my love with everybody and say goodbye.
I'll just say to the end that if anybody is coming to Denver, then we're hosting a private investor breakfast in ETH Denver on Friday. Reach out to me for details. It's incredibly limited. It's also already oversubscribed. We're focusing on accepting investors in there, but to reach out to me if you want more information about that.
I would say the Impact Investing Latin American Forum is happening. It's going to be in Yucatan at the same time that ETH Denver. Both this is an impact space, of course. If anyone is going, I'll be very happy to meet them there and to celebrate we've been awarded Best Free Fi project by INAPA. So I'm happy to share that with the community. And see you in Denver. Cody, my partner is in there, so it would be great to meet you also. Thank you. Thank you, Tomer, for providing this space to talk and to connect.
So with that in mind, I will say thank you, everybody. I hope it was short and sweet. So we'll have enough taste for going forward. We know where we are going with it. We have another meeting in a month. Hopefully next time we'll get more updates. If you want to present your company or your investment vehicle in the next, reach out to me on Telegram and invite people who are involved in the industry into the group as well. That's it. Thank you, everybody.
Thank you.
Very much, Tomer.